Hi everyone, and welcome to our second webinar of the day. I see some of you were with us earlier on, so it's great to have you join us again, and new traders from the US. And I'm just checking over. David has got you've got the recording going. Yes, thumbs up. Yeah. Fantastic. But before we start, as usual, please may I draw your attention to the disclaimer that I know you can see on your screens. As you know, trading can be a very risky business, and you should not think of entering this market, this business, with money that you cannot afford to lose. So very, very quickly, let's get rid of that. Very, very quickly, this is myself and David, and as always in this webinar and in all the webinars we do, we'll be looking at the markets through the prism of volume price analysis, supported with our quantum trading tools. And for the Forex market, not only do we look at VPA, volume price analysis, on the chart, but we also bring in the other elements that you have to know, and you have to understand, the other drivers that move this market. It will be the fundamental news, what's going on in related markets, and as I explained this morning, more and more the political risks that are sort of swirling around the markets at the moment. And this morning we only referred to the kind of the war of words that have been going on with between China and the US, and the latest is the threat by China to withhold the rare earth metals. But there's another sort of storm brewing in the background. It's really been there all the time, but it's now come to the fore, and it could cause a real problem with the euro and the eurozone, and that is Italy threatening to well, first of all, they've been threatened with fines for their debt level being too high, i.e. breaking the fiscal rules of the European Union. That's the first thing. Brussels has retaliated by saying they're going to issue a fine, something like 3 billion euros or 4 billion euros. Which always amazes me. If you're already in debt and somebody threatens you with a fine, so you've got to go and raise more debt to pay the fine. Don't understand that. But more significantly is Italy has threatened before, and that is to develop a sort of parallel currency. It's called a mini bot, and which sort of breaks all sorts of rules to do with the EU. But they've been emboldened, if you like, to take a tougher stand about the percentage that they can have as debt relative to GDP, in the fact that the more Eurosceptic parliaments in Italy have, I think they have 40% of the electorate behind them, so that's kind of emboldened them. But that's something that's also in the background. Euro's been selling off quite heavily, actually. So we'll be looking at the euro, and in particular, in fact, I'm going to look at the euro dollar and the euro Aussie. So all these drivers, all these factors that can affect the Forex market are actually explained in the books that make up the Forex Trading Library, and that's $9.99 on Amazon, and it's actually the digital versions of the book. This is a slide from our quantum trading education program, where, as I said, the books is your first is your introduction to VPA and everything else that I've just mentioned, and then the program takes it and really sort of develops it so that by the end of it you really do have a very deep understanding of what makes this market tick. The indicators that we will be looking at today, we're looking at the whole raft of the quantum trading indicators, but in particular, these are the Forex specific ones that we've developed. We start with the CSI, the currency strength indicator, and I will also be looking at the heat map, because the heat map, I used it this morning to explain how you use it when a currency is either overbought, or a currency pair is overbought and oversold, and the difference that you will see, the different sort of chart patterns that you will spot on particularly the daily chart. So I'm really going to follow on from that. So if you missed this morning, I'm not going to repeat verbatim what we did this morning, because that would just, for people who've been already, that would be very boring. But what I would suggest is, this is being recorded. Do go over to YouTube once these video recordings are up, and just work through. It's about sort of 15-20 minutes, and then what I say now kind of builds on that, and that will give you a much clearer picture of what we're going to cover today. So that's that one. And with regards to the indicators, That is what we call the currency dashboard. It comes as a package, as a little bundle, but you don't have to invest in the bundle. You can just buy one. And the one indicator we always suggest with Forex is you start with the currency strength indicator. Or you can go the whole hog and buy the full package. If you do have the full package, all future indicators are free and all your upgrades are free. Your upgrades are free whether you buy one or the full package. And if you've bought one and then you want to upgrade, you'll always be credited with whatever you've bought. You get 24/7. All upgrades are included. There's also a 7-day money-back guarantee, and the indicators are available for MT4 and 5, Ninja, TradingView, and TradeStation. We've put it up there because we've actually started work on the indicators for TradeStation. You'll find all the details at quantumtrading.com. Saves me going through the site, because it's much more interesting if we go and look at the indicators in action on the site and how they interact with our chart analysis, and in particular with volume price analysis as well. The program is constructed so that the full package of indicators is included in the program, and if you've bought anything from us in the past, that will be credited towards the cost of the complete program. And it really does say it is all you need to know to trade this market with confidence. That's the site, quantumtradingeducation.com. It's all laid out there. Spend some time, the modules are explained, and basically everything that's included in the program. And finally, if you want to catch up with my thoughts of Chairman Cooling, what's going on in the markets, you can catch up on my site. I've got a number of Facebook pages. They all do different things. So there's my personal page, which is Anna Cooling, where I'm actually now putting more of my thoughts, what I think of what's happening in the market, because I'm always being asked about, what's going on, what's going to happen in a more general way, as market sentiment, etc., putting everything that I know about the market. So that's on my personal page, annacooling.com. There'll be a bit of market analysis, but stock analysis is on the front page of the site. The Forex has a dedicated Forex page, commodities has a dedicated page, and the stock also is another. So there's tons and tons of information, resources. So as I said, not only on how, a little bit about the indicators, but lots and lots about volume price analysis. Right, I'll just put that down. While I'm doing that and sorting myself out, I'll pass over to David.
Thanks, darling. And Anna's having a cough and a drink and just getting herself sorted out. So a very warm welcome from me. If this is your first time of joining us, a very warm welcome, and it's great to have you here. And we run this as a two-hander, primarily flip-flopping between the MT5 platform and NinjaTrader, which I have on my side. Anna's got MT5 up at the moment. If you have any questions, please just drop them in the chat box. Happy to answer them there. If they're longer questions, we will answer them on air for you. And a very warm welcome to our current users as well, who are both got a mixture of some who've got some of the indicators and some on the education program as well. So it's good to have you with us today, and we will get going. Pass back into Anna. As I say, any questions, just drop them in the chat box. Happy to answer them there for you.
Okay, let's start with the Euro Aussie, and the reason we started with the Euro Aussie is because this morning what we looked at is we're actually looking at chart patterns, and the chart patterns, because there are 5, those of you who know VPA know there are 5 pillars to volume price analysis. Obviously price action, volume, support and resistance, candles and candle patterns, and time. And what I wanted to have a look at is a particular pattern, which is broadly called an inside day pattern, that had appeared on the Euro Aussie, and whether that particular chart pattern is a reversal pattern or is it a continuation pattern, and how, if you have the indicators, how the indicators will help you validate which it is, basically. So let me just recap very quickly on the Euro Aussie. Now, Euro Aussie is a pair that I've actually been following for some time. I'm actually short this pair at the moment, and we've got some nice VPA lessons, as I said this morning, going up in the run-up to the high of 162.67. Then we had the gap down. That was after the Australian elections. But this is the candle that we focused on this morning. And what happens is an inside day is basically when the price action retreats to within the spread of the candle. But here we just didn't have it once. We had it 1, 2, 3, 4 days, and that is actually Monday, this Monday, which was the bank holidays, which is why the volume is much, much lower than you would normally expect. So how this works is basically you have the high, you have the low, and at some point you will have a continuation of the high is broken or a reversal from here, and that is when you have a break of this of support at the low of the candle. And in fact, it also coincided with a very strong support line that we have here on our support and resistance indicator. The thick line confirms that it is a stronger line than the hatched line, and on Ninja you've got accumulation and distribution. So you could say that is looking to be a reversal. Now what has also happened this morning, as I said, that was actually a down candle this morning, and I said the 200 was coming up, so we could actually get a short-term pullback. Now how this compares, let me just find the heat map quickly. Move away from the CSI, and I want to look at the CSI as well, because it also comes into multiple time frames come into play, and it really answers the question of how you play the different time frames. So what you see on the slower charts, I've got the daily and I've also got the 4-hour chart, and you see this potential pullback, reversal, correction, how you play that on the faster charts. And we've got the Renko, and we've actually got the 3-minute chart, and the move higher is actually getting underway. But with the heat map, the reason the Euro Aussie has hopped back up to spot 2, but in fact it was all the way down to spot 6 and 7, which was picking up the move lower, as I said, following the break of the inside day candle. And what we need to consider here, with the heat map works on lots of different levels, like the CSI. Our indicators are very sophisticated. They give you a snapshot. You can have an instant visual picture of what is happening on a currency and a currency pair. But once you sort of dive deeply into the numbers, into what the lines are doing on the CSI, it gives you so much more information. But just on level 1, as it were, this is the pullback that we're seeing here. As you can see, the minute, the 5, the 15, the 30, right up to the hour, we have in green. The 4-hour and the daily is still in red. The values of the monthly and the weekly, the value of the monthly is actually quite low when you compare it to the value that you see on the dollar CAD, because it was the top two, when these are the top 2 pairs. And if we go over and now look at the daily chart of the dollar CAD, you will know probably why, of the two, why I decided to go short on Euro Aussie and not on dollar CAD. But keep in mind these values. Also keep in mind at the bottom here, in fact, the pound yen's also hopped back up again. That was at the spot 28. Look at the values on the monthly chart. It tells you the if you like, the depth of weakness, how that value has to go positive as the pair climbs higher, but it's got an awful long way to climb, as it were. So if you like, if you are going to take a reversal trade against such a bearish tone to the pair, then you are probably taking on more risk. With this one, with the Euro Aussie, I would say in terms of risk, when we look at the faster time frames, let's go up here on the 3-minute chart. Really, the move really is off the, just turns that down a bit, is probably, I would say, well, certainly the bounce off the volume point of control. In fact, it's I would say here it came back up to the volume point of control. It retested it. It actually went into deep red, so it looked as though it was going to carry on lower. But in fact, it's been marching steadily higher, and we've got the heat map. Bright blue, lots of volume underneath it. But as I said, on the daily, this is the pullback, and it's certainly worth taking that trade completely opposite to the trend that has been developing on the daily chart, as I said, following the break of the inside day candle. And the Renko here, this is where you would use a Renko, this is where you would look in, and you can see here that would keep you in. Now what we're looking for here, this is going to continue higher, just the dots would stay blue, they stay underneath the little bricks, not at the top, saying, confirming that this has got some way to go. This would stay bright blue, and it would only, we'd only start to see a resumption, if you like, of the primary trend. If we take the primary trend as being this one, because we've had this clean break of the inside day, that would now probably the primary trend. What we need to see first, as I said, is a change of color on the trend dots on the Renko and the trend monitor as well. Just to segue back to the daily, this is the daily. And you say, well, okay, you've had this break here, but I don't want to use the daily chart for my entry. What would I possibly use? And this is where the 4-hour chart really comes into its own, because the volume point of control, this is the price action within that inside day. Then it came down to the volume point of control. It was really once it broke away from the volume point of control, you also had the 200 pushing down on it. Then if you could, having analyzed the daily chart, then you use the 4-hour chart, you could then take the trade to the downside. But as I said, we're having a pullback, and this candle here has actually provided a very nice trade to the upside. Very quickly, as I said, there were two pairs that I was looking at. Let's see the dollar CAD. Why? And look at the picture. Both these pairs were at the top of the heat map, and you say, well, why did you go for the Euro Aussie and not the dollar CAD? And the reason is very, very simple. The dollar CAD, let's expand that here. You see, this has really been a sideways consolidation with a reasonable amount of volume, in as much there's lots of spikes, lots of wicks to the tops of the candles. So, and in fact, yesterday it looked as though it was actually going to be a breakaway from this congestion period. But the heat map is actually signaling, because as I said, it's at the top of the heat map. So we would say, well, actually, although it's been going sideways for some time, it's at the top of the heat map. So we would be looking for more likely a reversal, more likely. That's all we can say, because you always have to go back to the chart and look at the chart to see what the chart is telling you. And as I said, on the daily chart yesterday, and I saw some commentary written about the dollar CAD. Oh, great! It's it's been consolidating since well, almost the beginning of April, as it were. It's moving sideways, and it certainly had an attempt to break higher, and then it's come back into the consolidation phase of price action, and now is actually moving lower. So that's probably not one that you would look at for taking certainly a trade to the short side at the moment. Let's just have a look and see what the 4-hour chart says. Yes, and in fact, this was the spike higher. Again, interestingly, we have a volatility candle, and a volatility candle, the reaction following a volatility candle is generally this. Then acts as an inside day. An inside day then is indecision. There's no firm direction, and that is what we are seeing, and maybe we are seeing the start of this reversal, but it needs to take out the low of that candle, or then it's got the volume point of control. As I said, the dollar CAD for a reversal has certainly got a little bit of work to do before we can make that assumption. So two pairs at the top of a heat map, two very different daily charts, two very different 4-hour charts, and as I said, with all indicators, proprietary indicators, standard indicators, you use them. You have to get to grips with understanding price action and volume on the chart. What is the chart? What kind of phase, what type of price action can you see on the chart? Is it a trend? Is it congestion? Is it congestion with volatility? Is it a trend with volatility? So once you get to grips with that, you then say, okay, that's what I see at the chart. What are my indicators of telling me? Are they confirming that, or maybe are they telling me to stay out? Because when we look at the CSI, let's have a look at CSI for both for these currencies. Let me just undock that for a second so I can change the time frame. I'll just move that up slightly. Let's move on the daily. What do we actually see on the daily? Well, interestingly, we can see there has been buying of the Aussie on the daily, and we know it's been against the euro because the euro is turning down here. But more interestingly is now there is a bit of divergence here that we've seen on the dollar and the Canadian dollar. But if we go down to the 4, whether that divergence is still there at some point, let's scroll back a bit, because yesterday's breakout, possibly a fake out, until that point, look at the line of the, where am I? Oh, sorry, the Canadian here and the US dollar. They're moving in the same direction. This is what I said about these indicators. They work in, they give you so much more. They give you a lot of information. In fact, look at the lines here. Got the dollar falling. You've also got the CAD falling. So when they're falling, they're going in the same direction. You are in a consolidation phase of price action. And if they're in a consolidation phase of price action on a higher time frame, and you're trying to take a trade in the faster time frame, it can be very difficult. You're going to get a lot of choppy action. And just to go back on the volatility candle, this has acted as an inside day, if you like. On this occasion, it didn't. It did retreat very slightly, but it was a continuation pattern. As I said, it's either a continuation pattern or potentially a reversal pattern. So that's what I've got to say on that. Anything else you want to add to that, David? No? So as I said, let me just pass over to David. He's got, are you going to do the Aussie yen again, or have you got something else?
I've got the Aussie yen, I've got the
right, now that's all very well, that's all happened. That's lots of information about what to look for on the charts in terms of VPA. We do have preliminary GDP at 1:30. Yeah, so we would expect certainly the dollar to to calm down. We're waiting. That's at 1:30. We've got another 25 minutes or so, and we'll see what kind of volatility that brings up. There's nothing else major for the rest of the afternoon, but tomorrow actually we do actually have some PMI data from China. So I think tomorrow is probably going to be quite a lively day in the market. It's a lively day every day, but it more so than usual. I'll just have over to
Thanks, darling. You should be seeing my NinjaTrader platform coming up any minute now. Just check over on Anna's side. Yep, I think that's come up. Yeah, great. Okay, lovely. Completely different arrangement. I thought we'd start with the Aussie yen because that's where we left it off this morning. And across the top, you've got the faster time frames of the 3-minute, the 5-minute, and the 15-minute. Down on the bottom, we go into the 30-minute, down bottom left, 60-minute in the middle, and then right over onto the daily over on the right-hand side. I'll come back to the daily in a minute because it's one I've highlighted this morning. But essentially what we've been seeing this morning is we mentioned at the time, this is the nice thing with NinjaTrader, it's very easy to pick off where we were because it prints in real time and it prints the correct time, which is often difficult or impossible on MT4 and MT5. This was 8 o'clock, this is where we started, and we mentioned at the time, as you come into session crossovers, you're always looking for those reversal opportunities, and indeed it was classic, it was setting up for just that. And that's what we've seen for the rest of the morning. Very much the trend monitor has reflected that. We've gone from bright blue into darker blue, through this quite extensive congestion phase into dark red, and now we're coming out the other side into bright red of as the move gathers momentum. And part of that, what I've also done is I've isolated out the yen on the currency array. I'll pop over to that in a minute because it's quite interesting to see what is actually driving this. Is it actually Aussie weakness? Is it yen strength? You know, what is it? What is driving the move right now? But in terms of this particular chart, where are we heading to? Well, there are various levels. As you can see, we've got potential support here on the accumulation and distribution indicator. This is price-based support, this red dashed line, and the thicker line here below it, more potential support here. You can see how strong this platform is. And every time this is tested, it becomes ever stronger, and the line is then printed wider and wider. Hence, you see these relatively narrow lines or thin lines here. These are levels which are certainly there, but perhaps have only been tested once or twice. For example, here you can see it was tested twice on the rally, came up, tested it, fell back, came up, tested again, fell back. So this level is quite strong. These levels are relatively weak. The thicker these lines, then the stronger they are. So we've got some pretty decent potential support here, but more that's price-based. But moreoverly, we've also got the volume point of control here. So what we're looking for in terms of where the pair is likely to move into further congestion, this is 1 point, which is only a few pips away. Again here, same thing, only sort of a handful of pips away here now from the volume point of control where we expect further congestion, purely because this is the heaviest area of price, volume rather, on the chart. As you can see here, when you get to these low volume nodes, as here, the price moves through very swiftly. The reason for that is very simple. There's nothing there in terms from a volume perspective at any rate, not a price perspective either, but from a volume perspective, to cause the market to pause. There's no reason for it to pause there. The volume is very light. It means there's very few orders sitting in that area. And in addition, more importantly, if the market doesn't consider it an important area first time around, why would it consider it important now? So from a trading perspective, what's so important is as you approach these regions, let's suppose the market breaks through, ultimately gets below this level, and we start to approach these regions here, and moreover down here, then as the price action approaches those regions, you expect price to accelerate through them because there's very little in terms of resistance or support, whichever way you're trading, to hinder the market, to hinder the progress of the market. And of course, all of that will also be reflected in the volume down here. If you've got rising volume, you'll see it move through here very quickly. That's the anticipation of price action and the power of the volume point of control itself and the histogram and what it reveals for you as a trader when the price approaches these various levels. So support and resistance is always viewed from two levels. First of all, these dashed lines, that's price-based resistance and support, and the volume point of control is incorporating time and volume into that same metric, if you will. It's not moving particularly quickly, but it's nevertheless it's in a bearish trend, looking to go further. And part of the reason for that, if we just head over to the indices, which I've got on another workspace, it's all about sentiment right now. Let's click that one on. There we go. Top line, we've got 5 minute time. We've got different time frames here, but we've got a 5 minute, 10 minute, 15 minute. This is on the YM, this is the NQ, and this is on the ES. But they're all pretty much doing the same thing, and this is down onto daily for those equivalent futures contracts. The most interesting one is probably the YM, but this is the price action that we've seen pretty much this morning. Let's go to the 15 or the 10. They're all pretty much the same. There we go. We had the rally this morning, and this really was reflected in the buying of particularly sentiment towards the yen, or selling of the yen and buying of the Aussie. That's what we saw this morning. Then we hit the reversal point, and we were in congestion on this particular chart at any rate on the NQ with the VPOC up here, and now we're starting to see it roll over, and that's why largely we've seen that reflected in the Aussie yen, because the Aussie yen is a currency pair of risk sentiment. The most interesting one from a longer term perspective as to where equities are heading, and in particular broad market sentiment, this is the YM. And you can see the strength of these areas now that I mentioned before. This is a very strong area now of what was acting as a platform. It certainly acted as a platform over here, helping to prop the market up and push it higher. But now that that's been breached, it was certainly breached here and it managed to rebound, but then this level came into play, acting as a ceiling, really capping off that move. It tested it, one, two, maybe 3 times here, 3 or 4 times, failed on each occasion. Now we've rolled over, we've gone through the volume point of control, and from a bullish perspective at any rate, these are worrying signs for investors, because below us, as I highlighted just now, on this region here, we've got low volume. So we're moving into low volume territory, and as we move through this region, you expect price to move through there fairly rapidly. What's also interesting about this phase of price action, which is really pretty much for the whole of May, is note how we've got this massive increase in volume, broadly speaking, for the whole of the month. And if you compare it to really anything through here, this is February through the start of the year, then we've got some pretty large numbers going through the market right now with this volatility, all the uncertainty going on. We've got politics driving all the various aspects of US equities in particular. And it's remaining bearish for the time being, which you can see reflected on the trend monitor here, which has transitioned through from bright blue into dark blue, into dark red. Now we're out the other side into bright red. And with all these various levels up here and now approaching a low volume node, anywhere down to 25,000, certainly as far as the YM is concerned, that's going to open a trap door possibly for a much steeper fall in due course. Having said that, the one piece of news that is going to really dictate the next excuse me, the next couple of days, and that is going to be the news out of China, which I think comes out tomorrow. Yeah, the PMI data from China, and that really will heavily influence every single market, from US equity markets through to particularly the yen pairs and the yen complex in terms of risk sentiment. If that's very positive, then the markets will probably view that as a very positive, despite the fact that the overlaying all this are the trade wars with China, which are having a direct impact, and of course the political war of words that all goes hand in hand with all of that. Let's just head back to the Forex markets. Let's go back to where we were, multiple time charts. There we are. That's the move we're seeing in the Aussie yen at the moment. Pretty bearish. Now we're seeing a spike coming in because it's 20 past 1. We've got 10 minutes to roll to the big news at the bottom of the hour. And inevitably what you'll see is positioning. You'll see trap moves, fake moves, all sorts of things going on, which is why you're seeing this volatility coming right now. It's 10 minutes to run, and it's an ideal opportunity, certainly for a big news release like the GDP. Then it's an ideal opportunity for trap traders into weak positions. We've got a classic example here. We've got the volatility triggered literally as I was talking. Ton of volume coming in under it. Ideal opportunity. We've got two levels of price resistance come into play almost immediately, capping that move off. Now we're starting to see the market retrace. Lots of traders will have jumped on that. Maybe they didn't know the news was coming up. Perhaps they did. Who knows? They will have jumped in that, got trapped in there, into a congestion phase. Now it looks as though they've come out the other side in one fell swoop. Let's just head over to, that's the Aussie yen. And if we go over to the currency array, which I've isolated out, I mentioned that earlier on, just to find out whether yen sentiment is universal. And the short answer to that is no, it's not. And I've actually got 3 different time frames here. I've got this is 5 minute, this is on 10 minute, and I've got the 15 minute here as well. And what you're seeing there is a really mixed bag. This is the Aussie yen at the bottom here. Let's just see where it is. Here it's down here on 10 and on 5. Let's just get that out of the way. And on 5 as well here, Aussie yen is down here. But if you go to this chart, for example, and the yen complex is always a nice one to start with in terms of the currency array, because what you should see, if there's universal buying or selling of the yen, then what you will see is all of these pairs on one side or the other of the zero line here, the fulcrum of the market, which is here, the horizontal, if you will. We haven't got that at all. We've got selling of the yen here against the Canadian dollar, and we've got buying of the yen here against the Aussie dollar. So it's a question of trying to isolate out. If you're trading a particular pair and you're not aware of this, then there's nothing wrong with trading the Aussie yen right now, but just be aware of the fact that sentiment towards the yen is not universal across the market by any stretch of the imagination. It may follow. There's nothing to say that all of these pairs up here may move down to this side of the midpoint, if you will. Equally, of course, these could all reverse and join their brothers and sisters up here. So it's a question of figuring out whether the Canadian yen, for example, why it's trading at that level in contradiction to what the Aussie yen is doing. Is that, for example, strength in the Canadian dollar, which is driving that particular pair, which it may well be, and not really very much weakness in the Japanese yen? And that's what you need to figure out all the time. And if that is all reflected over on, let's go to the CSI over on 15, This is what we're seeing right now. This was the Aussie. This was, again, going back to 8 o'clock. It was very overbought at 8 o'clock our time as we moved through towards 8:30 this period. And I said at the time, if you're looking for reversal opportunities, you'd be looking at things like the Aussie. You'd be looking at the Swiss franc, which was very oversold and looking to bounce, and that's done precisely that over the rest of the session. Let's go down to 10. There we go. Same sort of picture there, starting to get into oversold. The New Zealand dollar here and the Australian dollar. The Swiss franc here is rising very strongly up into overbought. The yen here, this magenta line, has got some way to go yet. And you can see there the Canadian dollar is just starting to roll over. So maybe an opportunity to short the Canadian as it gets up to this level. It's just starting to roll over on 15 as well. Very overbought. And you'd be looking to match it up with something down here at very oversold. Just head back to the charts and just switch that over onto the euro yen. Sorry, not the Aussie yen, sorry, the Aussie Swiss, just to reflect that, because let's just pop that up. That's just loading up. That's been a very strong move as well. Some nice VPA lessons in here as well. Let's just pop this one up. This is the 5 minute. This is the strength of selling we've seen, actually much stronger against the Aussie Swiss than on the Aussie yen. And then that's really the key to all this, is to try and pick out those pairs which are going to be moving the strongest of all. There may well be a trend in a certain pair, but it may not be as strong as as in another pair. And it's just a question of identifying that. First of all, you start with the CSI, then you go to the matrix to look at sentiment. Then you're looking at the array for sentiment and also trend strength, and then you're over onto the chart to really try and, as Anna did with the currency heat map, looking at those opportunities. They may look the same on the indicator as they did in the heat map, but when you actually tease them out on the chart, it jumps off the page at you as to which one is going to be the better opportunity. And that may well have been the case here in terms of the Aussie Swiss, if you were looking at the Aussie Swiss or the Aussie yen as reversal opportunities. And then as they gradually develop momentum, it's a question of picking it up in terms of the volume profiles associated. This is a really classic example of a price waterfall where you get the widening spreads and you've got the rising volume associated. So it's just another classic VPA lesson. It's a really nice example. No wicks to the candles in this waterfall, so there's almost no buying going on there at all. Looks as though we're carrying on, further selling of the Aussie, further buying of the Swiss franc. Big volume under this last candle here, this a long-legged doji candle. It's not descriptive of anything other than it's telling us indecision. Looks as though that momentum is now gathering pace, further downside momentum. Trend monitors stayed bright red throughout this particular move. The transition from the bullish phase into the bearish phase was really very quick. Didn't even bother going to the darker red. It just went straight to dark blue and then out the other side into bright red to confirm the strength of trend. And that's often another factor when you're looking at the trend monitor. If it's a slower trend change, then yes, you will get the full transition from the darker blue into the darker red and out the other side, and vice versa for the other direction. But on occasion, when you get a strong move like this, it skips one of those and just goes straight through the other side to signal that you have got a strong trend underway. Just pop that down out of the way. Let's see where we're going. We've now got volatility on the 3 minute come in. We've got to go till not long now to the open. 5 minutes to the open. 5 minutes to the news rather. Big volatility candle, ton of volume coming into it. Signals two things. First of all, you've moved outside the average true range, and therefore it's a volatile piece of price action. And secondly, you can be guaranteed, given the volume that's associated with it, that the market makers are participating in this move, and therefore you expect trap moves, reversals, all sorts of things. Once the price action has cleared well away from that particular candle, it's fine to re-enter the market if you're not in the market. If you are in the market, then you've got a decision to make. Your expectation is the market will reverse inside the spread of the candle. If you've taken a big chunk of this out, probably wise to close out for the time being. I certainly would if this has come in now. The nice thing with the indicator, it triggers in real time. So you're not left wondering. It's instant. It tells you straight away. And the reason it happens is because its speed of movement you can imagine that there will be a lot of traders who've not got involved in this trend, and they're wishing they had, and they're looking at the chart and thinking, I wish I could jump into this. What happens? The market makers bang it down. They all jump in. They're the Johnny-come-latelys. In they go, and now they're trapped in a weak position. It's just classic. And to be honest, if you're a market maker, you do exactly the same thing. So we're now going to see a reversal inside the spread of that candle. And all these guys and girls who've been trapped into these weak positions will be regretting the fact they did it. And now they'll be stressed by the fact that their positions have gone into loss straight away, which they do anyway because of the spreads, but increasing loss. And what they thought was going to be some nice, easy money is now not the case. And they're now going to be squeezed. And worse still, if they have dived in, then you've got the big news release coming up, and there's likely to be extreme volatility associated with that across the markets. Don't think we've got any other volatility elsewhere. No. No, okay. And that's the power of using multiple timeframes. It just gives you all that information to help you, whatever time frame you're trading, you will see something different in a different time frame. You can see the trend monitor is bearish across all the time frames. It's even transitioning down here. And what's interesting about this is that, as I mentioned just now, this one's not gone to dark blue. It's gone straight into dark red. So we've gone from bright blue, skipped the dark blue. Now we're into darker red. The trend line here, which is part of the trend monitor, it's a two indicators in one, if you will. What the trend line is telling you is that this is now moving below the fulcrum point, this black line. That's the fulcrum of bullish and bearish sentiment, if you will. And that's now starting to dive. And it gives you a sense not only of strength of trend by the steepness of the line, but also the extremes, how far this trend has moved away from the fulcrum in either direction. As you can see on the 30-minute chart, what are we expecting to happen for this particular pair? Well, several reasons to expect congestion. We're moving through this very dense air platform, which appears to have been breached. We'll see in the next few minutes. If that market closes below it, sorry, just get rid of that. If it closes below this level, then that's going to act as resistance on any reversal back. Then we've got the volume point of control, this yellow line, which is the fulcrum of the market in terms of volume and price and time. And then we've got another level here of potential support just below it. So there's several reasons to expect this market to congest at this level as far as the 30 minutes concerned. And if you're a scalping trader and you're just about to jump into that market, it's probably something you would want to bear in mind in taking a position, irrespective of the fact that we've got a big news release due up any minute now. You can see here we're starting to trade back inside that volatility. Classical trap move by the market makers, just a great example. So simple and so powerful. Let's just see what the 15-minute chart looks like. We've got some support in here. We're at the volume point of control again. We've got some resistance overhead here. So a very similar picture here. This may close off with a deep wick. Volume's a little bit, let's just squeeze that over a little bit. Just try and build the volume up a bit. There we go. I have to say the selling pressure under here is pretty lightweight given the volume under here. So it looks as though the selling is drying up a little bit. And that may well be reinforced when this candle closes off. We've got a deep wick to the lower body. If it closes like that, possibly with some major buying coming in from the market makers, we will see in due course. Let's just go over to the currency indices themselves, which I've got over, where are they? Here, sorry, couldn't see it for a minute. There we go. I've got the 4 here. These are on all the same time frame. These are on a 15-minute time frame. Let's hope they are. Yep, 15-minute time frame. This is the dollar over on the left. Then I've got the Japanese yen here on the right. Down at the bottom, I've got the euro. And over on the right here, this is the latest one we've developed, which is the pound index. And as you can see here, it's been quite a lot of selling of the yen. It's starting to tick up now. We're starting to see some buying of the yen coming in. In terms of, right, okay, now we're seeing the reaction in, markets opening up on the news. I'm just going to pass back to Anna for a moment. Okay. We'll just see what happens on the news. Actually, let's go back to the, here we go. Just see what happens. Has it come out yet or not? It should be out. I think I've got it up here somewhere. Yep, there we go. Just refresh that.
Plus 3.1 versus 3.
Okay, you've got it before me then. Okay.
Talking forex.
Okay. So basically it's coming on forecast. Yeah. Okay. Quite a load of data there to take in. Okay. Just see how the market reacts. Let's go to, in fact, let's go to the Aussie dollar, just see what happens to the Aussie dollar. Got a dollar pair up. Okay, short-term weakness in the dollar. Again, now we've got the volatility trap underway. You've got it on 3, you've got it on 5. Haven't got it anywhere else yet. So let's see what's happening on the Aussie yen. And see, I'll go and see how the indices have reacted as well. Lots more volatility. Let's have a look at the US indices. That one, there we go. Volatility there too. Bit of a spike. Moved inside, looking to climb higher. We're up into the volume point of control on the 10-minute NQ and the 5-minute YM. Just going to switch off for a moment, grab a drink. That's better. Let's move that out of the way. Not a hugely strong reaction to it, I have to be honest.
Hardly anything at all, actually.
Yeah, very little. Very muted. This was a chart I was looking at this morning, and it's really a question of, just move that up, sorry, it's gone out to the side a bit, there we go, pop it up full size, there we are. It's really looking at the opportunities for reversals, particularly on the yen complex, and this is certainly one I've got my eye on because we've had this congestion phase. This is classical price action. You get a big trend in one direction, then into congestion, and we're looking for the reversal out the other side. And certainly one of the candidates for a move to the upside. So I've got that on my radar along with the other yen pairs as well, because the yen has been bought very strongly over the last few weeks. And certainly in terms of the heat map, they are all pretty much ranked near the bottom. So, you know, it's a reversal opportunity of the currency pair. What we're looking for here is setting a level, breaking through that particular level. It might be 76.50, your comfort zone, if you will. Once it reaches that sort of price point, you've then got a very solid base in place for a decent move higher. But the issue, of course, is that in looking at that opportunity, where is the market going to run into difficulty? And it's up at these levels all through this region. So the only clear water is from 76.50, if that was your entry target, if you will, the point to get in where you felt there was enough of a move away from this congestion period. You've only got about 100, 110, 120 pips in the move. That may be enough for you, may not be. Before the prospect is the market will then start to run into congestion at this level, because you've got resistance, you've got more resistance here, you've got a ton of volume, and you've got the volume point of control as well. So it's very unlikely that this move, if it develops, is actually going to develop very, very far. It will then congest at this level, and thereafter it's a question of how much volume is driven into the market, what the market sentiment is, whether that move then actually carries on higher. So if you're comfortable with 100 pips on quite a wide stop loss, which may be equivalent to, or certainly a little bit less than that, but pretty heavy stop loss, that's fine, but that may not be your comfort zone for your risk and money management. So that's a personal choice. But just to put that one on the radar, those are sorts of things we're looking at the moment in terms of longer term reversals based on sentiment. However, having said that, a huge amount will depend on what happens with the China release, because that will impact all the markets dramatically, particularly US equities. I'm going to switch off there, pass back to Anna.
Thank you. While David was speaking, just a couple of things. First of all, I actually brought up the euro dollar because it's an interesting chart on the daily. It is a trend, but it's it's a very messy trend in the sense that there are lower highs and lower lows. But and you can see here this oscillation within the trend monitor dipping in and out of the different colors. So it's certainly one for perhaps taking trades on a daily basis. It's been very, very I would say very tricky to trade if you were looking to hold that sort of longer term. What's also interesting is today's price action. This candle here, it's very, very narrow range, and when you get a day like today on a narrow range, that makes it even more tricky. The actual news itself hasn't had an awful lot of reaction. This is the 3-minute chart, which has sort of been in congestion, really. You can see here around the volume point of control, we had this, you see this massive volume under this this down candle here, and you think, oh great, it's going to break to the downside. Ton of volume underneath it, but that's actually sort of more buying than selling, because if that was selling, that down candle should be very, very, very much bigger, and it wouldn't have a wick to the bottom of the candle. Then we've had a trigger of this is the volatility that was triggered on the release of the news. What's happened is behaved in exactly the same way. More times than not, you have a retracement within the spread of the candle, so it's acting like an inside day. Inside day is when it's also indecision. As I said, you can't decide whether to go back in the original move, which here is to the upside, or is it actually going to reverse lower? Well, where's it likely to go? Well, the volume point of control is the obvious stopping point. We've got a lot of volume going in there. There's a lot of volume went into the volatility candle wick to the top, so there's kind of weakness there. The next candle, a lot of volume with a doji, or you can say it's indecision. Then slightly less volume, but again a wick to the top of the candle. Again, sort of indecision, sort of a bit of weakness, but sort of doji-like. Now, as I said, these candles, the volatility candles, or a candle that maybe hasn't had volatility triggered, but the subsequent candles are inside the spread of the price action, you treat the high and the low as its own support and resistance. And as I said, it's moving around the VPOC. So euro dollar, personally, I really, it's one that I wouldn't be looking at today. Oh, what's happened? All the pretty, let's put the template back on, see what's happened. There we are. And the Renko also says that there have been sort of little moves going higher, but a lot of pullbacks, changes in color in the trend dots, changes in color, these colors in between colors coming into the trend monitor. There are plenty of other pairs out there that would offer a better trading opportunity. And what I wanted to also highlight is we've talked about the GDP, preliminary GDP, which hasn't had much of a reaction. The other item of fundamental news, and it's one that isn't featured on Forex Factory, which is a great site when you start and just to get when you begin to understand fundamental news, but it doesn't cover everything. It doesn't cover all the releases, and it certainly doesn't cover the release that is one of the key releases that the Fed considers and really does base an awful lot of its monetary policy on, and that is what's called the PCE prices index, and it's a personal consumption index, and they use the core and the general one, and they really look at these numbers, because if they feel that these numbers are rising, i.e. personal consumption is rising, that is a red flag to them to say that the economy is overheating. What's interesting with the numbers that have come today is they've actually come in below expectation. So there has been a drop off. People are not spending 0.4 against a previous was 0.6, 1 against an expectation of 1.3. Previous was 1, but that was revised higher. So if the Fed were looking to increase interest rates, these numbers should be absolutely red hot. They're not red hot. Everything is very lukewarm. Everything is very, it's not behaving in the way that they would expect. What does that imply? Well, it implies that there's likely to be a rate cut and not a rate increase from the Fed. But there's an important meeting coming up in June. Just one of these things that you have to be aware of and look out for in the calendar that's coming ahead, because we're at the end of the trading week, end of the trading month, and we all start the merry-go-round again on Monday. Is that okay? So that's it. Let me just see if we've got any more questions. No, nothing. Right, I think we're going to wrap it up there. Thank you so much for coming along. We are back. We're back later. We're back at 3:15 our time, when it will all be Ninja at the moment, because we haven't got the TradeStation ready, and we'll be looking at the indices. We're looking at the commodities as well, but it's certainly not Forex. That's basically it. We've done Forex for the day. We've done 2. There is a recording going up. That'll be up later on today. If you're not joining us later, then we will be back next week. Brilliant. Enjoy the rest of the trading day, the rest of the week. Have a brilliant weekend, and we'll catch you later. Take care.